Modern Money by L. Randall Wray. The Chartalist or State Money Approach. The Chartalist or State Money Approach can be traced from Adam Smith through to John Maynard Keynes. In this approach, money is a creature of the state. The state defines money as that which it accepts at public pay offices, mainly in payment of taxes. Let us briefly examine the views of Smith, Knapp, and Keynes in some related arguments, primarily of Minsky and Lerner, before we turn to the policy implications of this approach. See Ray 1998 for a detailed treatment. Adam Smith observed that paper money often circulated at a discount to specie, especially if its redeemability for specie were uncertain or subject to a waiting period. However, according to Smith, if a paper money is accepted in payment of taxes, and if it is not excessively issued relative to the tax liability, then it will circulate at par with specie. Thus, a wise government could not only prevent depreciation of its paper currency, it might even cause paper money to carry a premium over specie. A prince who should enact that a certain proportion of his taxes should be paid in a paper money of a certain kind, might thereby give a certain value to this paper money, even though the term of its final discharge and redemption should depend altogether upon the will of the prince. If the bank which issued this paper was careful to keep the quantity of it always somewhat below what could easily be employed in this manner, the demand for it might be such as to make it even bear a premium, or sell for whatever more in the market than the quantity of gold or silver currency for which it was issued. Smith. An essentially non-redeemable paper money could actually circulate above par even under a gold standard if it was legally required by the state in payment of taxes, and if the quantity issued were kept somewhat below what could easily be employed in this manner. According to Smith, the key then is not really redeemability, nor is it legal tender laws that attempt to render their paper of equal value with gold and silver. Smith. Rather, it is the acceptance of the paper money in payment of taxes and the restriction of the issue in relation to the total tax liability that gives value to the paper money. Importantly, Smith recognized that this paper money need not be government fiat currency, for his argument was predicated upon the recognition that the paper money is the liability of the banking system. All that mattered was that the state accepted these banknotes in payment of taxes, in which case they could circulate at par or even at a premium relative to specie. George Frederick Knapp put forward a state theory of money similar to, but more general than, what is known as the Chartalist approach. This approach is opposed to the metalist view, according to which the value of money derives from the value of the metal standard, for example, gold or silver, adopted. More generally, according to Knapp, metalists try to deduce the monetary system without the idea of a state. This, he believes, is absurd, for the money of a state is that which is accepted at the public pay offices. Knapp, 1924. See also Goodhart, 1989. It is thus impossible to separate the theory of money from the theory of the state. Chartalism is often identified with the proposition that legal tender laws determine that which must be accepted as means of payment. However, Knapp's analysis went further. What forms part of the monetary system of the state, and what does not? We must not make our definition too narrow. The criterion cannot be that the money is issued by the state, for that would exclude kinds of money which are of the highest importance. I refer to banknotes. They are not issued by the state, but they form a part of its monetary system. Nor can legal tender be taken as the test, for in monetary systems there are very frequently kinds of money which are not legal tender. We keep most closely to the facts if we take as our test that the money is accepted in payments made to the state's offices. Then all means by which a payment can be made to the state form part of the monetary system. On this basis, it is not the issue, but the acceptation, as we call it, which is decisive. State acceptation delimits the monetary system. By the expression state acceptation, it is to be understood only the acceptance of state pay offices where the state is the recipient. Knapp, 1924. Thus, it is the decision of the state to accept at pay offices and not legal tender laws that creates a chattel money. In Knapp's view, a chattel money is a pay token. Quote, when we give up our coats in the cloakroom of a theater, we receive a tin disc of a given size, bearing a sign, perhaps a number. There is nothing more on it, but this ticket or mark has legal significance. It is a proof that I am entitled to demand the return of my coat. When we send letters, we affix a stamp or a ticket which proves that we have by payment of postage obtained the right to get the letter carried. The ticket is then a good expression for a movable shaped object bearing signs to which legal ordinance gives a use independent of its material. Our means of payment then, whether coins or warrants, possess the above-named qualities. They are pay tokens or tickets used as means of payment. Perhaps the Latin word charta can bear the sense of ticket or token, and we can form a new but intelligible adjective, chartal. Our means of payment have this token or chartal form. Among civilized peoples in our day, payments can only be made with pay tickets or chartal pieces. End quote. Knapp, 1924. Note that like the tin disc issued by the cloakroom, the material used to manufacture the chartal pieces is wholly irrelevant. It can be gold, silver, or common metal. It can be paper. In any case, quote, money always signifies a chartal means of payment. Every means of payment we call money. The definition of money is therefore a chartal means of payment. End quote. Knapp, 1924. According to Knapp, acceptability of banknotes in private transactions is not, as was commonly believed, due to the bank promise to convert these to specie. Quote, a banknote is a chartal document, and the bank issuing it is pledged by law to accept it for a payment of that amount. An inconvertible banknote, then, is not a nullity, but has this in common with the convertible banknote, that it is a till warrant of the bank. End quote. Knapp, 1924. What is important is that the note, quote, is a private till warrant available for payments to the bank, but clearly the customers of the bank can use it for payments between themselves, as they are sure it will be taken at the bank. These customers and the bank form, so to speak, a private pay community. The public pay community is the state. End quote. Knapp, 1924. What makes banknotes state money? Quote, banknotes are not automatically money of the state, but they become so as soon as the state announces that it will receive them in epicentric payments, payments to the state. End quote. Knapp, 1924. If the state accepts notes in payment to the state, then the business of the bank is enhanced, quote, for now everybody is glad to take its banknotes, since all inhabitants of the state have occasion to make epicentric payments, for example, for taxes. End quote. Knapp, 1924. In times of distress, frequently during wars that required finance provided by banks, however, governments would pass laws ending convertibility, announce that the state would henceforth make payments in terms of the banknotes, and accept payment in the form of the banknotes. Knapp, 1924. Usually, this was for one bank only, the bank which became the central bank. Usually, this was for one bank only, the bank which became the central bank. Keynes's account was quite similar. According to Keynes, the money of account is the primary concept of a theory of money. Keynes, 1930. In turn, quote, money itself, namely that by delivery of which debt contracts and price contracts are discharged, and in the shape of which a store of general purchasing power is held, derives its character from its relationship to the money of account, since the debts and prices must first have been expressed in terms of the latter. End quote. Keynes, 1930. He further clarified the distinction between money and the money of account. Quote, the money of account is the description or title, and the money is the thing which answers to the description. End quote. Keynes, 1930. Following Knapp, Keynes argued that the state determines what serves as the money of account, as well as dictates what thing will be accepted as money. The state therefore comes in first of all as the authority of law, which enforces the payment of the thing which corresponds to the name or description in the contracts. But it comes in doubly when, in addition, it claims the right to determine and declare what thing corresponds to the name, and to vary its declaration from time to time when, that is to say, it claims the right to re-edit the dictionary. This right is claimed by all modern states, and has been so claimed for some 4,000 years, at least. Keynes, 1930. The age of Chartalist or state money had been reached when the state claimed the right not only to enforce the dictionary, but also to write the dictionary. Keynes, 1930. Let us emphasize that Keynes believed the age of state money to have begun at least 4,000 years ago. As such, the state theory of money would certainly apply to all the modern economies, including those living under the gold standard last century. Even a gold-based commodity money is state money. Privately issued debt, such as that issued by banks, might be accepted in settlement of transactions, even if it is not declared by the government to be money. It can circulate side by side with state money. Keynes, 1930. However, the state might use its Chartalist prerogative to declare that the bank debt itself is an acceptable discharge of a liability. Keynes, 1930. At the cost of not conforming entirely with current usage, I propose to include as state money not only money which is itself compulsory legal tender, but also money which the state or the central bank undertakes to accept in payments to itself, or to exchange for compulsory legal tender money. Keynes, 1930. In a footnote to this passage, he goes on, quote, Knapp accepts as money, rightly I think, anything which the state undertakes to accept at its pay offices, whether or not it is declared legal tender between citizens. End quote. Keynes, 1930. Therefore, like Knapp, Keynes identified state acceptation as the key to determining what will serve as money. As Keynes and Knapp recognized, member bank money is the primary thing answering to the description money used in private transactions or within the private pay community. When accepted in payment of taxes, it is also used in the public pay community, but it is not definitive from the perspective of member banks because they must deliver reserves, mainly central bank money, whenever taxes are paid using member bank money. Similarly, Hyman Minsky argued payments among banks occur on the balance sheet of the Fed as banks use Fed money, reserves, to settle net debits from their accounts. Quote, whereas the public uses bank deposits as money, banks use Federal Reserve deposits as money. This is the fundamental hierarchical property of our money and banking system. End quote. Minsky, 1986. This is, of course, the same hierarchical arrangement noted by Knapp in his public and private pay communities, and by Keynes. Further, in an argument very similar to Knapp's, Minsky explained that people accept bank money in part because they can use it to meet their own commitments to banks. Quote, demand deposits have exchange value because a multitude of debtors to banks have outstanding debts that call for the payment of demand deposits to banks. These debtors will work and sell goods or financial instruments to get demand deposits. End quote. Minsky, 1986. In other words, according to Minsky, bank money has nominal value precisely because it can be used to retire debts to banks. It is, so to speak, accepted at bank pay offices. The borrower retires his/her promise to the bank by delivering bank liabilities at the future date, and the need for bank liabilities to retire one's own liabilities to banks leads one to accept bank liabilities in payment for goods and services delivered. Rather than focusing on money as a medium of exchange, this focus is on money as means of payment to retire liabilities. This led Minsky back to the Smith-Knapp recognition that taxes give value to the money issued by the government. Footnote 17. This has been recognized by Goodhart, who argued the use of such state-issued fiat currency was supported by several factors. First, the state levies taxes and can insist that these be paid in state-issued money. This ensures that such fiat currency will have some value. Goodhart, 1989. Similarly, James Tobin argues, quote, by its willingness to accept a designated asset in settlement of taxes and other obligations, the government makes that asset acceptable to any who have such obligations, and in turn to others who have obligations to them, and so on. End quote. Tobin, 1998. End footnote. Quote, in an economy where government debt is a major asset on the books of the deposit-issuing banks, the fact that taxes need to be paid gives value to the money of the economy. The need to pay taxes means that people work and produce in order to get that in which taxes can be paid. Minsky, 1986. End quote. And even though most taxes are actually paid using bank money, because of the hierarchical arrangement, banks can make these payments to government only by using central bank money, that is, by losing reserves. Quote, returning to the primary state money theme, Abba Lerner insisted that, whatever may have been the history of gold at the present time, in a normally well-working economy, money is a creature of the state. Its general acceptability, which is its all-important attribute, stands or falls by its acceptability by the state. Lerner, 1947. End quote. Just how does the state demonstrate acceptability? Quote, it is true that a simple declaration that such and such is money will not do, even if backed by the most convincing constitutional evidence of the state's absolute sovereignty. But if the state is willing to accept the proposed money in payment of taxes and other obligations to itself, the trick is done. Everyone who has obligations to the state will be willing to accept the pieces of paper with which he can settle the obligations, and all other people will be willing to accept these pieces of paper because they know that the taxpayers, etc., will accept them in turn. End quote. Lerner, 1947. This seems to be about as clear a statement as one can find. Even if it has not always been the case, it surely is now true and obvious that the state writes the description of money when it denominates the tax liability in a money of account, and defines the thing that answers to the description when it decides what will be accepted at public pay offices. The thing which answers to the description is widely accepted, not because of sovereignty alone, not because of legal tender laws, and not because it might have or have had gold backing, but because the state has the power to impose and enforce tax liabilities, and because it has the right to choose that which is necessary to pay taxes. This right, as emphasized by Keynes, has been so claimed for some 4,000 years, at least. As Lerner said, quote, cigarette money and foreign money can come into wide use only when the normal money and the economy in general is in a state of chaos. End quote. Lerner, 1947. Of course, when the state is in crisis and loses legitimacy, and in particular loses its power to impose and enforce tax liabilities, normal money will be in a state of chaos, leading, for example, to use of foreign currencies in private domestic transactions. In all other cases, it is state money which is used as the ultimate means of settlement, and state money is that which the state accepts in payment of taxes. All other monies used domestically are denominated in the state money, with their liquidity and acceptability related to, although not strictly determined by, the ease with which they can be converted to state money. In the Chartalist approach, the public demands the government's money because that is the form in which taxes are paid. The state uses taxes as a means of inducing the population to supply goods and services to the state, supplying in return the money that will be used to retire the tax liability. In the modern economy, it appears that taxes are paid using bank money, but analysis of reserve accounting shows that tax payments always lead to a reserve drain, that is, reduce central bank liabilities, so that in reality, only the government's money finally discharges the tax liability.